Hello everybody, welcome back. So let's start on the stocks side of things and indices and a bit of gold as well. So if you're interested in the Forex, I've got a video prior to this. If you're looking to do crypto, then there'll be a video after this. That's how I'm going to do it from now on. So let's have a look. This is the NASDAQ in its futures market. Obviously it's still early days here. 9:30 UK time, so America's still fast asleep. Fair play to you guys. So let's have a look. So we're not really seeing anything major as far as major continuation or breakdown, to be honest with you. The trend is still up. The trend is still strong. Money flow index is high, but it's definitely not peaked. We're sitting over here at a comfortable 78, and currently at this very moment 76. The peak was over here at 81, and previous peaks have been much higher than that. So it doesn't look like a major area to see a peak from, and we're very close to achieving our previous local high here. So going on to a new all-time high for the Nasdaq. If you paid any attention to stocks recently, you'll recognize that tech stocks have gone mad. They've gone absolutely mad, and we can see that reflected on the Nasdaq. Now, I'm more interested in the S&P, to be honest with you, which is effectively the same looking chart. We're a little further away to our previous local high. We're going on to a new all-time high. So the next high to be achieved would be 4,640. Now, I don't really have a problem with that getting there at this point now, especially with Forex looking still like it wants to continue with its general direction, which is, for the euro up and for the Dixie down. Generally, we're talking on a daily term time frame. So intraday, you're going to see some wobbles around here, but intraday still looks like the giant continuation of their trends. So further downside for those, and that should be good news for stocks. Now, looking at this on the 4 hourly, there is a portion of the cloud flickered red. It's nothing on its own. This dip is just getting bought back up, and I would expect, and I really mean it, I would expect this to continue up in the short term. Now, if we have a look over here, there has been some money flow index peaking going on over here, and it hasn't really been listened to. So there is still a mania in stocks. People still want to see stocks go up. The money is going into stocks, and you can't blame them when the dollar's down. Your dollar's depreciating. So what do you want to do with your money? What are you going to do with it? You're going to put it to work. You're going to have to, especially if we've been in a roaring bull market since the beginning of the year, which we have. Most people don't see it, or they fail to recognize it, or they're unwilling to believe it. But it is a bull market, and it has been, and it's been pretty good, and it is working on a V-shaped recovery, is what it looks like. I'm not saying that that's what's going to happen, but it certainly has been a missed opportunity for those who wanted to stay in dollars anywhere from January at least. So 4 hours still looks good, the daily still looks good. So let's take it down to the lowest term time frames we can, which is a 1 hourly, which still looks good. Getting a launch pad here in the Bollinger Band Centre. We're above all major moving averages. We've got nothing to be afraid of. In fact, all we can see really taking place is a fresh pump signal generated around these levels, and we're looking for continuation on the hourly. Now, if you watch my videos on a daily basis, you'll have heard me saying, getting a little worried that we are peaking on these markets. Now, the technicals don't seem to suggest that we are exactly peaking, but I think it's only a matter of time before we do. And the main reason I'm coming to that conclusion is this bad boy over here, which is oil prices, which is also rocketing up. Oil is scary, right? The only reason I'm afraid of oil isn't because I don't know. I'm just afraid of the price going up too much, because this will filter through to CPI, so higher inflation later on down the line. So whether it's the next read or the read after that or the read after that, it's all eventually going to be priced into food and fuel and pretty much everything, really, because everything in the world has to be transported, and we've not worked out anti-gravity yet, so it's going to require oil, and oil at higher prices. Those prices get added on to pretty much everything, whether it's the manufacturing or the delivering, or just every aspect of the world basically is going to be influenced by the price of oil. And oil is a bullish chart right now, breaking out above all major moving averages on the daily. We've got a couple of drives of bearish divergence. They all keep failing, so I'll be looking for this to reach 83 before any sort of major pullback, and even that pullback will get bought, in my opinion. The only thing that's going to change this will be some kind of change in something like OPEx, I don't know, output or something along those lines, and I don't feel as though that's what they want to do, because if you take any notice about what it is that these guys keep saying, keep saying the world's about to enter into a recession. Recession means lower demand, which means that for us we need to keep the prices high because we want to make some money. And that's fair enough from their perspective, but by doing that, it becomes a self-fulfilling prophecy. By pushing up the oil prices, it will likely cause the recession, or deepen the recession, or speed up the recession. And so that basically is a self-fulfilling prophecy. So it looks to me like this is going to keep going up, or retain these higher prices, I don't see a pullback required on this until we reach like 83. Then a pullback, then a bounce, and honestly, with a view to move all the way back up to 90, the mid 90s, you know, something like 92 to 93. Finally, let's finish on gold then, and then my next video will be crypto, and this is how I'm going to do it from now on. So if you're interested in you know, any of these things, you might as well subscribe. I'll be breaking my videos down on a daily basis this way. So gold, still quite good. Weak though, definitely weak. I would have expected to see something a bit more bullish than this in the short term, but it's slow and steady wins the race, I suppose. We're hovering around this Bollinger Band Center 1950, and if we hold that area, which I think we probably will, but if we hold that area, we're looking to bounce and come out of this, which was basically an accumulation after the consolidation, down to a golden cross retest. Normally you get V-shaped recoveries from this, at least on the first pass. The second pass maybe not so much, but it's still quite good, and on a fundamental basis not really any reason to be bearish on gold. Not really, not with you know, the dollar still looking like it wants to continue down over the longer period. And I have a theory, which is that there'll be a rotation from stocks into cash and gold as well. So a rotation on a grander scale. So moving from, you know, like I say, taking profit on stocks which have rallied significantly, and moving into precious metals and cash. So yeah, looks quite good to me on the daily, to be picked up almost instantaneously. Here we have our first retest of a golden cross on the 4 hourly for the simple moving averages. So a dump down into it, front run it ever so slightly. We've reclaimed most moving averages on the lower term time frames, being the 200s, and we moved into a Bollinger Band. So again, we're looking to break 1960, and we're also looking to hold 1950. So a tight range at the moment. So with that, let's take it to a 1 hourly just to see if there's any signals on the 1 hourly. So the 1 hourly does look like it wants to go down a little bit further. So I'll be looking for the invalidation and validation to be basically 1950 for the long, breaking down from there. Probably stop losses below 1935, and the next area where you could try a move would be around the 1900 to 1888. Right, that will be that then. So there's your stocks and your commodities for the most part, and if you like that, subscribe. If not, there'll be a crypto video coming on soon. Thank you for watching. Take it easy.